All righty. Good afternoon, everyone. Thank you so much for joining this evening or morning or afternoon, wherever you may be. This is going to be a little bit of a different presentation this evening, just simply because our guest did kind of back out at the last minute due to a family emergency. So what I'm going to do today is really just go over some cool case studies over the last month or so and highlight some of the features on the platform that have really helped me get to the point where I'm at in trading. And even over the last 6 months, I've just been able to learn so much with these different features. It really kind of has changed the way I trade. And so I really want to touch on that. Just a quick note, if anybody does have a question specifically about the case studies or anything like that, please just put that in the questions tab. And if anyone has any questions just about the platform at all in general, you can just put that in regular chat and Dan will get to you. So Dan is also on here as well, but he'll be focused mostly on kind of customer questions and that type of thing. As always, just a quick disclaimer, anything that we're going to be going over today isn't necessarily buy or sell information, not necessarily. It's not buy or sell information. It's not advice. What it is it's a way for you to get an idea of how some of these features can be used in the real life setting. And that's really what I'm going to focus on for Raindrops. And the volume by price. So the Raindrop charts, I'm sure a lot of people have already heard of these. They've been around for a while, but they have really changed the way that I really, do technical analysis. And so, just a quick overview of the Raindrop. The Raindrop is simply just a double layered candle. The first layer is the volume weighted average price on the left side and the right side. So that's kind of what your typical bar chart looks like. And then on top of that, you've got the volume profile overlaid on top of the volume weighted average price for the first and the second half of the period. So what's really interesting about this, and you'll see, is you can really get an idea of the conviction by the buyers or sellers with these candles, something that you wouldn't necessarily be able to do with just a regular chart. So before I jump into any case studies, I just want to mention what the anchored volume by price is as well. It's essentially a volume profile that gives you the ability to easily change the date that you would like to measure the volume from. So if you've heard of the anchored VWAP, this is a take on that, except the average price, we're just showing all of the volume bars for the entire time period. So in this case, this is volume by price on the left. This is just regular volume on the right. And what you'll see here is on the left, what we have here is volume as a function of price rather than volume as a function of time. So on the bottom here, you can see, the volume at the bottom is simply showing us what these volume bars were doing on a particular date. On the left-hand side, you can actually see what these volume bars are doing at a particular price. So in this case, instead of the x-axis here where the volume is, it's on the y-axis because now we can see at what price levels these volume bars are at. And so you can see each volume bar has its own increment, and you can really measure where that volume is holding relative to a specific point in time. So the first example that I'm going to go over is a Raindrop example for Netflix. And the way this is going to work, my first slide is going to be just the case study description, and then we'll go into the image here. This case study on Netflix is simply showing how you can visualize volume flowing throughout a specific time period. So in this particular case for Netflix, you can see two different charts here, one on the left, one on the right, but they're actually the same chart. And what you can see here is the price action is breaking out through this resistance level. And we'll just go to the chart now because we have it up. What you can see is, this is our regular candle, and this is our Raindrop chart. And what you can see is, in the regular candle, it actually looked relatively bearish because you can see that we actually did close below the resistance line. If you compare that to the Raindrop, you can see how much volume is actually holding above this resistance, and then you can see your 2-day continuation up. Pretty much an impulse move, actually. So the way that I use the balloon, and we talk about the balloon Raindrop all the time, the way I use the balloon is around support resistance. Notice here, you've got balloons pretty much the whole way up. But when you really want to focus on that balloon is when it's breaking through resistance. So, and I'm telling you this because I've gotten burned because I thought something was a balloon, but it wasn't breaking through a crucial level of resistance. And all of a sudden, there's a pullback before the continuation up. And when you're trading options, you don't necessarily have time on your side. So, there's no recommendations here, but the way that I would kind of say to use this, if you want to utilize it the right way, is to definitely focus on this around resistance, a Fibonacci level, a moving average, possibly, the mid Bollinger Band, which is just the SMA 20. And so that is how you can really visualize if there is conviction by the buyers, because here, I would have possibly even thought of doing puts here because obviously we still have a very solid candle, but you can see a lot of that supply was dumped onto the market. And this is what's really cool. If you think about this candle as a sponge, if you think of a sponge, if you've got a sponge that's full of water and you pour more water on the sponge and it's already got a bunch of water in it, the water is just going to kind of run through the sponge and just continue its way to the ground. Now, if you've got a sponge that's dry and you pour a lot of water on it, that sponge is actually going to expand and it's going to absorb that water. And so if you compare that water to supply and you have a bunch of supply dumping on the market, sure, there were sellers that came in, but there was a buyer for all of those shares above this line. And so it's kind of like having a dry sponge, pushing that sponge through the trend line, and then all of that water, i.e. supply that comes crashing into, the sponge, quote unquote, you're absorbing that. And so if we didn't have buyers here, we probably wouldn't have absorbed the volume up here. It probably would have, been on the lower end if there wasn't anyone to buy that. So this is a way you can really visualize that from a different perspective, from a volume perspective. So that's the first example. Next example here is SLV. And so in the SLV case study, this is essentially a chart that we had a falling wedge. And you can see that I anchored the volume by price right from the top of the falling wedge. And so if I go to SLV here, which is just silver, you'll see here a couple different things. This is actually a pretty cool case study for two different reasons. So one of those reasons is simply because, well, let me fix this real quick. Hello. One of those reasons is due to the anchored volume profile. So what I'm going to do here is we've got the same chart that we just had on the presentation, and I'm going to add the anchored volume by price. And notice when I move this, the volume is changing. Every different point that I change it from. I was taught, and I'll be honest, Brian Shannon taught me everything about anchoring. I really never understood what anchoring meant. And so you'll see here, if I really anchor the volume profile from this reversal area, which is kind of where the status quo changed, you'll see in our original example here, you'll see that we are right at the apex of this falling wedge. And what you can see here is, you can see there's a lot of volume starting to aggregate here. And so if there's enough volume aggregating at this level, as soon as supply dries up and demand starts to outpace supply by anything, you're going to get that move up in price. And so if you look at the move now, you can see we literally went right up to that supply zone, and then we found resistance and pulled back. And so this is a way where you can really see, this supply that was acting as a magnet above, because at this point, all of this volume here is holding at a loss. So either they're going to sell at a loss or they're just going to hold their position until the price gets to that point. And so what happened is, clearly, everybody held their position. Demand started to outpace supply as supply started to dry up, and you had your move up to supply, and then you had a pullback. And so that's something that's really powerful, because at the end of the day, the market is driven by volume and price, supply and demand. That's all it's driven by. And so if we can understand where these supply and demand zones are, and we can identify these points of interest where the status quo has changed, that's where I like to really anchor this from? Now, some people may say, why don't you just anchor it from here? Well, this is in the middle of the falling wedge, right? There's still some action in this falling wedge that I want to capture. And so this is generally probably where I would anchor it from, just where the falling wedge is really starting. And then you get a better idea. And you can see how well price really respected this area. And what probably happened was a bunch of people probably got out from this level, and then everybody that was holding at this level, some people are probably still holding, but some people probably just said, I'm out and I'm taking my profit, or taking my break even at this point and getting out. And so that's where this supply comes from. So that is a pretty cool example on SLV. As you can probably imagine, the same chart is for GDX, GLD, any of the metals right now. So the next case study I have here is SE. And SE is it's just a random stock. Most of the stocks that I look at, I really don't know what they even do, because at the end of the day, I'm really looking for the inefficiency between the price and volume, rather than what they're going to do in the future. So what you can see here is, you can see in the before, you can see we anchored the volume profile right from this reversal point, and you can see how much volume was holding in this area. And so what it is it's showing you that most people who bought from this particular point in time are holding at the current price, because there's not a lot of volume holding in this area. Most people are holding here. So as I've mentioned before, as supply dries up and demand starts to outpace supply, you've got a nice move to the upside, which you can see in this particular chart here, which is just kind of the after. And so what you can see is, you can see if we anchor the volume by price from this particular point, you can see exactly where this chart was created. Remember, this was the original candle. All of this volume was holding here, and you had a nice move up, because as soon as supply started to dry up, that's when the price starts to move to the upside. And that's exactly what happened. So it wouldn't be shocking if the price actually came back to retest this area, because that's where most people are holding their original position. So anyone that's holding in this area is up almost 10% right now. So it's going to be a lot easier for them to sell at a profit and just be done with the trade and move on. Whereas, a different example, such as Peloton or Google, you're going to have the opposite effect, where notice here on Google, essentially you've got the opposite of what we had on SLV. And I actually did do this a little differently. I kind of did exactly what I said I didn't do on SLV, but I actually anchored it from this point here. And the reason was because this was a really strong candle. This area below was, not necessarily, I guess for me, I know on December 3rd that there was a big kind of capitulation moment before the next leg up. So anytime that you're changing the status quo, or you're changing something about the supply and demand, especially on December 3rd, where we had that, that weird action on NASDAQ and the QQQ and SPY, that's where I wanted to anchor from. So you can see here on, I think this was like December 31st or something, we had a nice bounce off this ascending wedge support. And pretty much the opposite of what we just talked about on SE, instead of that volume being below, it's above. So instead of the volume acting as a magnet below for the price, the volume above acts as a magnet for the price to move up. So if you look at Google, this is a really, really cool case study here. You've got literally a hard bounce right off of this ascending wedge support, and you can see how quickly the price got right back to this area. And then, oops, let me move this. I need to move this volume by price over. And you'll see still, I mean, most of the volume is holding at this 1350 area. There's barely any volume holding up here. So, if you look at it, there's a lot of people holding in the profit, almost, $100 a share in the profit. All it takes is a couple big hands to start adding to supply, and all of a sudden people, start trying to take profits immediately. And so I'm not saying that Google is going to crash back down to 1350, but it is something to keep in mind. Now let's try to anchor the volume profile from the actual point of where the ascending wedge starts on October 3rd, you can see essentially the same thing. Most of that volume is really aggregating right at the 1350 area, and then you had your very strong continuation up, and eventually you had a breakout. And one of the really cool things about this is you can see how perfectly the price broke through, previous resistance acted as support, and then you had a 3-candle move to the upside last week. So, you know, this is not an end-all be-all indicator, but it does help you visualize where those important levels are, because at the end of the day, it's all about where that volume is holding, how many people are in the profit, how many people are holding at a loss, and that's kind of how we can visualize that. Moving on to the next case study, we've got SHOP. SHOP is another really cool example of volume kind of creating a base. This is an example from mid-December. You can see here the volume profile was anchored. You had a ton of volume creating a base at this level, and then we had this resistance above right around, let's say, 410. And so if we go to SHOP and we kind of split the screen here to see the daily versus the weekly, you'll see some interesting stuff, right? So let's go ahead and anchor the volume profile from this reversal point, and you'll see this was our original candle right here. And then you can see all of that volume created a base. Oops, I just pressed notes. Hold on. All of that volume was creating a base for price to move up. And then you can see, you know, within literally about 3 weeks, you've got a 13% move up on the common stock price. And so that's simply just looking at the supply and demand, looking at where people are holding at profit, where people are holding at a loss, and getting an idea of kind of how the price is going to move after that. And we did also have the weekly candle here too. So you can kind of use that in conjunction with each other, right? So I'm just going to turn off the volume profile here. And you'll see on the previous example, we were already breaking out of this weekly wedge. So it was kind of like complementing the breakout from this volume zone as well. So it's always important to use multiple time frames, use them in conjunction with each other, and not just using one indicator to determine everything. I mean, when I go to make a trade, I look at least 3 time frames. Probably like 4 to 5, at least 3 to 4 different indicators. And, you know, when I'm posting on Twitter, I don't necessarily post all that because it's a lot of information to take in. It can kind of crowd the chart. But, you know, there's not just going to be one indicator that's just going to do it for you. Everyone's going to have their own strategy. Some people may not find this useful, and that's completely fine. But it is a way to show where that area of interest is. Peloton's another really cool example. This is an example of the volume profile here, and pretty much what we just talked about on Google, where we had a big move down. We anchored the volume profile from this reversal point. We pulled back, but you could see how many people were really holding at a loss at this area, right around the 32 mark. So if we go and check out Peloton, you'll see something pretty cool. This is one of my favorite examples of this. You'll be able to see here how perfectly the price bounced off this resistance area of where the volume was holding. So here you can see this was, let's see, what was our original candle here? December 2nd. So if we anchor from December 2nd, one second. There we go. So if we anchor from December 2nd, look at how perfectly the price bounced right back to that volume point. And that's simply because that's where a majority of the volume was holding. So remember where we started. We started right here, 2 white candles, and we had 3 days of just straight, well, you had a little bit of a fake or a little bit of a flush here before your move up. But you can see how well using that anchored volume profile on top of the anchored volume by price created by Brian Shannon at Alpha Trends, and you can see how using these in conjunction can really be helpful for your trading. You're not always going to have this perfect of an example where your anchored volume by price, your anchored VWAP is going to be exactly what your anchored volume profile is. But in this case, it was pretty damn close. So it's just a really cool example of finding support right where all that supply was, or finding resistance right where all that supply was, and then pulling back very hard. Dan's not a huge fan of this chart right now, but I'm not a huge.
Definitely not.
But I can't say that I hate this daily candle, but we'll see what happens. I don't trade Peloton. I think I made a trade like on November 29th for just a quick day trade and got out on the options play. But I generally like to leave IPOs alone, because at the end of the day, IPOs don't have a lot of historical data. You can't pick up on patterns that have not occurred yet. And so that's why I like to trade stocks that have a long, a long history that I can go back in time and say, oh, okay, this has happened before. Let's see what happened there. And that's when you can really use the strategy tester. You can't use the strategy tester on the anchored volume profile yet, but you could test any other strategy that you wanted to that included price and moving averages and all that. But for me personally, I do like to have a little more historical data before I start making trades on that. One thing that I do want to do is I want to go back to the SLV chart because this is a really cool example of the raindrops again. So notice that I have this particular candle right here highlighted. So you can see that when we did break out of this falling wedge, we did the same exact thing as Netflix, right? We wicked through the resistance, but we did not actually close above the resistance. If we switch to the raindrop chart and you compare these two candles, and it's very easy since they're just both highlighted here in orange, you'll see something very different on the raindrop. Whereas with the regular candle, there's the wick. With this candle, you can see all of that supply that drove the price down was being absorbed by buyers above the resistance line. And that's something that's really important and was a really big indicator of what was to come. I mean, you had your breakout here at around 16 and we topped out right at 1720-ish. So that's another really cool case study on being able to visualize, all right, are buyers actually there or are they not? And so another cool example of this is Facebook. So if we compare Facebook to when it tried to break out and when it didn't break out, notice this. If we go to the raindrop chart, and we draw just a very basic resistance line here, you'll see two different things happen. You'll see one, we did try to break through this area before, and just give me a second to optimize the screen. Let me get rid of the volume profile here. So here's an example of the opposite, where you don't have volume confirming the breakout. Notice here that when we did break out of this resistance, there was no volume confirming that breakout, and you can see that we had a nice continuation down. If we fast forward and compare that to actually the recent breakout, you'll see something very different. You'll see that a lot of that volume was aggregating above the trend line, showing that buyers were definitely there and buying above the resistance line. And then you can see what happened afterwards. I mean, within about 2.5, 3 weeks, you had a move from 205 to 220. From a common stock perspective, that's not the biggest move, but if you're trading options, that can be quite a trade. And everyone's going to trade differently. I personally am trading options. Dan trades common stock. So everyone's going to have their own strategy when it comes to these types of things. But I have found that, it can be very beneficial to use this as a gauge to see where those buyers really are. Another thing that I wanted to show here is Google on the weekly. So we went over Google on the daily, but I do want to show you guys Google on the weekly to kind of show you the same type of phenomenon that happened. And it's pretty much the same thing, but it's just seeing it on a different time frame. So what you can see here is on the weekly candle, we had we had a ton. Oops, sorry. In this case, I anchored it from here. And notice here how big that wick is. So for me, that tells me that there was some type of capitulation going on, some type of flush going on. The market maker knew that they were about to rip this thing up, so why not try to take out as many people as we can before we move the price up? So that's why I'm anchoring it from this point, because I consider that kind of the status quo changer. And what you can see here is you can see, and I don't have a before picture of this, but if you were checking out our charts last week, there was a ton of volume holding right at this area. And, we kind of had 3 weeks of just straight flat here. And what really convinced me that we were going to move higher was this big volume bar pretty much telling us that most of the participants in the market right now at this price level are holding right about break even. And so as we broke out, now all of this volume is actually holding at a profit. So it's going to be easier for them to sell as they're in a profit. They can easily just take their profit and move on. When you're holding at a loss, it's a lot easier to hold on to that supply. And that's how you can kind of get these big moves up, because if all of a sudden everybody is holding at a loss and nobody's selling, maybe a couple people are selling, and then all of a sudden, you've got a huge move to the upside, that's likely due to enough people said, I'm not selling, I'm just going to hold this out. And as soon as that last person, the weekend sold, that's when, the market can turn very quickly. So just another really cool example of being able to anchor this. And even if we anchor it from this June 3rd low, you can still see how much of that volume is holding here. You also have a ton of volume holding in the 12.20 to the 11.9 area from this particular date on June 3rd. And so that really tells us that even since summer, there were a lot of people accumulating this at this level. I personally think it was, just the Fed pumping the markets. That's your big volume bar. But, I could be wrong there. So that is really, a couple cool case studies on using the volume by price and the raindrops separately. Now, what you can do is you can use these all together, which is what I did with ATVI last week. And so if we go to ATVI, what I did here was I made a trade on this, was it last week or the week before? What I did was I was watching this particular point. So you can see here we've got the same chart that I just had up. And what you can see here is if I anchor, kind of what I did with Google, right? I anchored it right at this support level, and you can see how much of that volume was holding at this area. So I originally started looking at ATVI on December 31st, and then we had a big move down, and then we had a big gap down on January 3rd. But what you can see here is if we switch to the raindrop candles, you'll be able to see where that volume was aggregating around the anchored VWAP. So what you can see here is, and this is something that Brian Shannon taught me as well, essentially if you anchor the volume weighted average price from this true breakout area, that's a pretty strong area to anchor from. So you can see when we did gap down that day, notice where all of the volume was really aggregating. Sure, the daily candle looked good on the hollow candle, but you can tell that there was literally no volume on this flash down. So it was likely someone just selling, a very small amount of shares, either panic selling or getting, kicked out of a leveraged position, whatever the case is. It didn't take a lot of shares to drop the price, but it also shows us that a lot of shares were accumulating above this VWAP here. And what you can see, which happens a lot of the time, not always, definitely not always, but you can see that there's this impulse move afterwards. And so this is an example of where we hold support. We've got that bulb above the line, and then you've got your impulse move up. Whereas, with Netflix, we were looking for this setup above the resistance. Now we're just looking for that volume to hold above support to show us that this was a fake move down. And so we had our move up, and then we had our move right back down to test this area. So if you're able to essentially, look at the anchored volume by price, you could also see on top of all of this volume holding above the anchored VWAP, you can also see that how much of that volume was holding here from the volume by price. And so this is a really cool example of us using the volume by price from a different date than the breakout point here. And so it's really nice to be able to use these in conjunction with each other. You know, using more indicators, more different types of features on the platform is only going to give you more of an edge. So, you know, just using Raindrops is not going to be as effective as using the anchored volume weighted average price, the anchored volume profile, and Raindrops all together. The more tools you have in the toolbox, the more informed decisions you'll make. Sometimes if you have too many tools in the toolbox, it can be confusing, but knowing which tools to use and when to use them is really a big part of this game. So these are the case studies I had for tonight. What I want to do now is I want to apply what we just went over and go over SPY and QQQ for the week ahead. So if we go to SPY, we can see here, I'm going to split the screen. We're going to do daily versus weekly, and I'm going to switch this to just regular candles here. But what I'm going to do is I'm going to keep the anchored volume profile on here. And so this is an example where, let's say, you know, remember, we always want to kind of anchor it from these capitulation points. So here, clearly a capitulation point. So let's do it from December 2nd. And it's not shocking that the market just continued to melt higher because of the same reason. There was all of the volume was holding at this 322 level. So there was nobody to take profit here because everybody had pretty much had a position up here from December 2nd. And so you can see the price moved very quickly to the upside, but notice now there's not a ton of volume up above. We're right on this ascending wedge resistance, and most of the volume, the point of control from December 2nd is really right around 320. So it's completely, you know, showing us where these levels are. So not sure why that's like that, should be there. But the same thing with the weekly candle. If we show the weekly chart, let me go to hollow candles here. You'll see something that's pretty interesting. We're going to use the anchored volume profile on the weekly, and we're going to anchor it from a further point in time. So if let's say that we anchor it simply from the December 24th low here, you can see how much volume is currently holding in the profit. So it wouldn't shock me if we pulled back, but it also wouldn't shock me if we continued to just rip to the upside simply because the Fed is accommodating the markets right now because interest rates are so low. So, you know, naturally, I'm not necessarily incredibly bearish when we have this big of an engulfing candle on the weekly. You can literally see that all of this bearish price action, which wasn't much, was completely engulfed this week. And so that's really showing us that buyers are still in control of the market. Now, if we, I keep pressing these things. Sorry, one second. Gotta love doing this on the laptop. So if we anchor this from, let's say, you know, this point in time, September 30th, where we really reversed, you can actually see something very different. You can now see most of that volume is holding at this area, but when you compare that to, you know, December 24th, you can see, you know, a lot more of that volume is really focused down here. So there's two things that can happen. The price can kind of mean revert back to where all this supply is holding below, or you can just get a bunch of people buy in here and it kind of moves all this volume up to the next price level, which would then create another base. So this is the SPY into next week. One thing that I did want to go over is the alert system. So let's say that we are using the alert system, and maybe you know, let's put a MACD on there, and let's do Williams percent range. Now, for me, when I'm looking at the Williams percent range, I generally want to see the percent range drop below -50. That would be kind of a sign for me that we may be pulling back further. The next sign would be for the fast, this blue line, which is barely above the yellow right now, to cross back down below the slow. So what I can do here is I can go and create an alert, multi-factor alert. Kick-Ass Sanusi is the current name. Let's change that to SPY breakdown. We'll choose the expiration for, let's say, 15 days. And then we'll create our conditions. So what I just mentioned was we want the daily Williams percent range. So we go to the daily indicator, type in the Williams percent range, that is the 5, has crossed down through the constant value of -50. So that's the first condition that we want to become true for my possible sell signal to go off. My sell signal, this is more of just an example, but this would be something to keep in mind if we did break below 50. And then the second example would be the MACD breaking down. So same thing, daily indicator MACD fast has crossed down through the MACD slow. And so we do daily MACD slow. So now, without me having to go back and look at the SPY chart every day, even though I do this anyways, if you didn't have that much time on your hands, you would be able to have the system watch these areas for you rather than actually, having to go every day and look and see what happens. So this is really just another way to make the whole process of technical analysis more efficient. And also, if you're not a coder and you don't know how to write any scripting or coding, that's going to be hard to create a logical condition without that knowledge. So this visual interface gives you the ability to do that without having to have any knowledge of Python, PineScript, or any of those other scripting languages. So now the alert is created. If these two conditions break down, I'll be alerted and know, okay, maybe it's time to look at more of a bearish view of SPY. But, for me, I'm looking at these overall kind of levels, this ascending wedge here. So as long as the price is trading within this area, it's kind of business as usual, if you will. So sure, can this go down and break through? Absolutely. But what it can also do is just completely go to the upside and break right through this ascending wedge. A lot of the time people think ascending wedges are always going to be bearish. But I can tell you from experience that a lot of them do like to break out. And especially over the last 6 months, we've seen a ton of ascending wedge and ascending triangle breakouts, which tells me that, the market is definitely still bullish at this point. That can easily change very quick, but you always just kind of want to go with what's in front of you and what the market's telling you. So that is SPY. Let's move over to QQQ. Pretty similar chart. We're pretty much trading right at the top of that ascending wedge resistance. I actually did not draw it in here, and the reason I didn't draw it in was actually because I wanted to kind of show you guys the automated trend lines here. So what we have here is we have a completely clear chart. And a lot of the time, as you guys, you follow us on Twitter, after the 30th chart, pretty much after the 5th chart at that point, it's like, okay, I'm tired of drawing lines. And that's how you can quickly just turn on this trends feature and you can have the system find these lines for you. And so for me, I like to just turn on the trends feature and then I still have the discretion of kind of which line do I want to choose. So in this case, this is a pretty strong resistance line here. We're connecting this point right here, and we're connecting this point, this kind of cluster right here, and then this could possibly be the next resistance. So if I just double click, turn off trends, the trend line's locked in, and now I can move on to the next step of my process, which, let's put in some fibs here. So, everyone's gonna measure their fibs differently. Let's just do kind of a generic fib here from the, this May to June move. And you'll see how well, literally, this 2.618 extension is in confluence with this resistance line above. So for me, this is a pretty bearish candle. I mean, I'm not gonna, it's kind of hard denying it's anything but that. But anytime I see, a big engulfing candle like that, it's not necessarily telling me this thing's gonna rip tomorrow. But we are in a very odd state of the market. So don't take that as anything really. What I'm more focused on is the fact that if we do look on the longer term side of things, we actually have not broken through this resistance yet. So if I were, going to get an idea of where we may kind of find a short-term top, it's likely going to be right at this confluence between the 2.618 and this resistance area, which would put the market right around 225 for the Qs. Can that easily not be what happens? Absolutely. I don't really expect that to happen exactly like that, or that'd be pretty weird. But this is how you can use the system to get ready for the week ahead. So for me, let's say that who knows, the market just rips next week. What I want to do is I want to go ahead and create an alert at the line above, same type of thing. I am going to increase my sensitivity a little bit because this gives us the ability to capture that move, not necessarily having to hit the exact level. So let's just put it around $1.50 from that line. We'll choose our confirmation candle. That means I want to know anytime the 10-minute candle closes anywhere within this purple area, I'll be alerted. So once again, you're not having to stare at your chart. You're able to efficiently check out these levels and have the system watch them for you. Let's just do resistance above as the alert name. Give it an expiration of 5 days, and then the alert's created, and we move on. So this is really, and I use alerts not like Dan though. Dan, do you want to tell everyone how many alerts you have right now?
I have, let's look. I have currently 52 active alerts, and that's low for me.
I was going to say that's
yeah. I typically will have about 100 alerts active in my account at any given moment, and that's because I'm a breakout trader, right? I like to look for divergences and then set my levels, and then trade when it breaks out. So I'm watching a lot of stocks for breakouts, and they all don't trigger in the same day, or I'd go crazy. Stephanie had a good question. I think we should just jump into it. She asked, how do you know if volume represents buyers and sellers? Is it the color of the bars? And I mean, I'll take a quick swing at that, and you can chime in. But I mean, look, every trade has both a buyer and a seller. Right. So if you look at my charts, right, you'll notice my volume bars are all the same color. I've made them both the same color because I actually consider it to be somewhat distracting. If you think about the psychology of it, this actually, when I was first learning to trade, something a mentor of mine explained to me, right? There is a buyer and a seller in every single trade. The color of the volume bars in most charting platforms by default, including TrendSpider, matches the color of the volume bar to the color of the candle. So if it's a green candle, you have a green volume bar. And a lot of traders look at that and they think, gosh, it's buying volume or it's selling volume. Well, really, no, it's both. The psychology and the thing to understand is, and Jake alluded to this earlier, is, it's the psychology of it, right? If you missed your chance to buy something at $10, right? And how many times have you heard someone say, gosh, if, shop ever gets down to 300 again, I'm going to buy it. Or if SPY ever hits 285, I'm getting in, right? Or the reverse, right? I missed my chance to get out. And, if it ever gets back up to 350 or whatever, I'm going to sell immediately. It's that psychology that drives the effect of the volume. It's traders and algorithms looking to get out. And if you have a large, if you have a volume by price point sitting there somewhere, and price approaches, and it's a very large volume bar, you've got a lot of people who got in or got out at that level, right? And they're waiting for their opportunity to their chance to get in or out, right? So it's not really so much about whether it's buying and selling volume. It's how many people are in the trade. Right? How many people bought at a price level, sold at a price level? And that's why anchoring at an important pivot point is important, right? I like to anchor at points of capitulation, right? So a high, a major high, a major low, right? I think that's how Brian, I think that's how Brian also does it too.
Yep.
A large gap, when there is a lot of capitulation in the market and people kind of threw in the towel, or there's a lot of FOMO and everybody jumped in. Right, because if price breaks, if everybody jumped in at a certain level and then price breaks through that, well, then you have a lot of people looking to get out, right? A lot of them will take losses, and that will create selling pressure, right? And the converse on the upside. So I don't know if that helps, Stephanie, but I don't look at it as buyer or seller volume. I just look at it as a place where there were a lot of trades, because there's always a buyer and a seller in every single trade. And I think a lot of traders think of it in terms of buying and selling volume, and I think that might throw a lot of people off. The fact that a lot of people transacted at a certain level means that there's a lot of people waiting to transact at that level again, should price break through it or come near it again, right? If price pulls back to a volume, a volume level on the anchored volume by price or an anchored VWAP, everybody who missed their chance to buy is going to look to buy at that point. And everybody who bought at that point is going to start getting nervous, and they're going to start wanting to get out, right? Or considering getting out. And it's that dichotomy, that psychology, right, that makes volume so powerful. So I hope that helps. Sorry, I know you just asked me a simple question about alerts, but I wanted to answer that question. This is a very good question. Does that help, Stephanie? Just let us know in chat.
Yeah, to add to that, like Dan said, if I buy 1 million shares of stock A, somebody's got to sell me those shares. It's not like I just stole them. So my buying volume is somebody else's selling volume. So that's why raindrops are so important, because you can see if there's actually buyers absorbing that supply. That's what's the most important part of this, is where are the buyers actually stepping in and keeping the price at where it needs to be. So this is a really good example where Netflix, we can see that if we were just looking at price, we don't necessarily, I'm not convinced this is a bullish move. But if I know that the supply that drove the price from 325 down to 320, if I know that supply was absorbed by a bunch of buyers, then I know that was quote unquote buying volume, because those sellers were not able to, they were able to move the price down, but they weren't able to actually move where that volume was, where that price was, where the volume was. So kind of a hard thing to explain, but yeah, like Dan said, every seller there's a buyer, every buyer there's a seller. So you really have to kind of dig deeper than just looking at, oh hey, there's a big volume candle.
It's two to tango.
Yep.
Steve asks if we can use raindrops on shorter time frames. The answer is absolutely. You can go down to 10-minute charts. Raindrops are constructed out of smaller candles, right? So a 10-minute raindrop is built out of 10 1-minute candles. 1 hour raindrop is built out of 60 1-minute candles, right? So you can only go down to 10 minutes, and you can go up to a full day.
Yep. So if we go on the 1 hour, you'll see these raindrops turn into just simply 1 hour candles rather than the daily. And it's interesting here, right? We've got kind of this reversal point where we can see we had literally just a pretty much straight linear move down from January 8th to Friday. But what you can see here is you can kind of see on Friday, at the bottom of this 1 hour candle, you did start to see some buyers kind of coming up at the top of the range and starting to accumulate at that area. So you got to use multiple time frames though, right? The 1 hour looks interesting. You go to the daily though, and all of a sudden you're essentially kind of looking at a completely different picture. So if we go to that daily chart here, you'll see that it's kind of the opposite, right? You can see a lot of those sellers are actually, a lot of that volume is actually on the lower side of this price range. So you can see that there wasn't a lot of demand to absorb that supply, hence why the price was creating new lows during the second half of the day. So that's how you can use them in different time frames. I'm a swing trader, so I'm always going to use them on the daily, and then I'll use the hollow candles or the regular candles on a shorter time frame. But yes, 100% you can use them. I think it just is dependent on kind of what time frame you're trading on.
Absolutely. Robert asks, why would a close on a candle be at the resistance line but above on a raindrop? That's simply due to it's really more visual. It's the lines are connecting points that are constructed out of smaller candles, and you end up having slight variances there because raindrops are constructed out of 1 minute bars, right? Jake asks, I understand the left and right ticks represent the average volume for the first and half period. What does a small tick that crosses both sides? That's the average volume for the entire period, right? So, you can
for VWAP for the candle.
Correct.
Yeah. Just to add to the previous question, so if you're looking at a regular hollow candle, that hollow candle is a function of price, right? It's based on price. The raindrop is a function of volume. So volume and price can look very differently on the same time frame. So that's kind of what I just wanted to add to that.
Absolutely.
Any more questions? No?
Okay. I posted a few links in the chat for those who are interested. We did a webinar back in August that was all about raindrops. We went into a tremendous amount of detail about that. If you want to understand how they're constructed, how they work, that's a great thing to watch. You can also on the TrendSpider website, I'll throw the link into the chat here, but there's a white paper that goes into a lot of detail about them as well. And I definitely, if you're going to use them, I definitely am a big proponent of understanding what you're looking at. There's no secret. There's no magic to these, right? We are very upfront about exactly how they're built and how they're constructed. If you go to that link and click on the white paper button, it'll give you a white paper that explains exactly how raindrops are built, and it'll actually walk you through the process that the system goes through when it constructs a raindrop, so you can understand what you're looking at. Because it's like anything else in the trading world, right? There are 1,000 different indicators. They all work in different ways. Raindrops are a great tool that not a lot of people are using, and that gives them some edge that other indicators that are more popular, have kind of lost over time. But you really should understand them and how they're constructed, so you can make the best use out of them. Jake, we didn't cover it, but one thing you might want to touch on is anchoring from blue raindrops.
Oh, sure, yeah. I haven't done as much on that, so I don't have a ton of case studies, but let's just go to United Healthcare. What is United? Here's that ticker.
I think United Healthcare is UNH.
UNH, that's right. Okay. So yeah, this is actually a pretty cool case study of anchoring from blue raindrops. Whoa, there's a lot of them. Let me just get rid of the screen here real quick. So this is a pretty cool example. This happened a while ago, so this isn't going to necessarily be relevant to the most recent price action. But what I was able to do, this was earlier in the year, in February, all the way to probably later summer. What I was doing was I was anchoring the volume weighted average price from blue raindrop. So you can see a blue raindrop, as we mentioned.
Jake, I think we lost audio.
Did we? Can you hear me?
Oh.
Can you hear me now?
Yes, sorry.
Okay. So you'll see these blue raindrops, especially on United Healthcare, are going to form at reversal points. So not always perfect, but here's a really nice one. You got to move up. You got a blue raindrop and you got a hard move down. Blue raindrop forms at the base here. You got to move up. Blue raindrop forms. You got to move down. So that's how generally you can use them. Any stock is going to be different, i.e., if you're using the MACD on Apple, the MACD is not going to have the same, response as you're going to see on Starbucks or Tesla. So same thing with raindrops. But this is a really cool case study of being able to anchor the volume weighted average price from these blue raindrops. And you'll see once the price finally capitulated here, once it finally caught a bid and started to move up, notice how well the price started to respect this area. And so I think I anchored these essentially here. And then we had this whole move up. Notice we've got another blue raindrop right before the move down. So notice here, as I mentioned, I mentioned the blue raindrop can be a reversal point here. But what the blue raindrop can also be is a continuation point. So if you've got to move down, you've got a blue raindrop forming, and then you've got another continuation down. That is also a possibility. So just because you've got a blue raindrop forming does not mean there's going to be an imminent reversal the other way. It can easily mean that it's just confirming the way that the trend is moving. In this case, you had a blue raindrop, and then 3 days later, you had your continuation down to the next move. Now, what's really interesting is if we anchor the volume weighted average price from this blue raindrop, notice how well the price respected this area until we finally broke out here. And notice how we found resistance right at this blue raindrop anchor here, and then finally broke to the upside. So I wish I had a couple more case studies here. I just haven't done it that much lately, but this was a really cool one that I did do some studying on over the summer and found some pretty cool correlation between how price respects these areas at these blue raindrop reversal points. Dan, just to confirm, we don't have any other questions right now?
No, I think we're all good on questions. If anyone has anything they'd like to ask, now would be your chance. If not, we'll probably
peace till next Sunday. So just quickly, I want to mention how you can spread the word. We really appreciate all of our customers that post on Twitter and all of these social media sites sharing their charts. It's really invaluable to us. And if you do want to become an affiliate and get compensated for doing that, so for anyone that signs up through your link or through your coupon code, you'll be able to essentially, help spread the word and be compensated for that. So we do believe that word of mouth is the best way to get the word out and the most efficient way to. And, if you do think we have something special and you want to help us tell the world, please reach out at jake@trendspider.com, and I'll be happy to talk more about that. If you aren't a customer, thank you so much for listening in. Please share your ideas, your suggestions, thoughts, feedback. You can always sign up for a free trial and then cancel after 7 days. So please, if you have anything for us, whether it's positive or negative, we actually welcome negative feedback probably more than positive. Please share it with us. It is only going to make the product better. Our roadmap. I do want to just focus on the scanner because I do think that's going to add probably the biggest level of utility to the product. The scanner is currently in testing. It's not like it's not done. It's just we are doing some quality assurance on it to make sure that everything's working right and there aren't any bugs. But definitely make sure to check out our updates in the coming weeks because the scanner will be in the updates at some point in the future. I'm hoping within the next 3 to 4 weeks. We just don't have a hard ETA at that point, but it is testing right now. So we're getting very close. And that's about all I've got. And Dan as well, I think. We really appreciate you joining us this Sunday. If you would like to take advantage of the coupon code that we have, please use Web20. That is 20% off up to 12 months. And we would be happy to answer any questions you have if you do sign up for a trial. If you want a one-on-one demo, we do offer that as well. So we do understand the platform does have a little bit of a learning curve. And so we're happy to walk you through and make sure that you're comfortable with the product. Anything else on your end, Dane?
No, Andy, that's not last week's webinar. It's just a preview video of the scanner if you're curious about how it works. But we did a webinar last week where we went into the scanner as well. That's a much shorter video. That's about 3 minutes, and it's a quick crash course into what it is and how it works. I'm pumped about it. I mean, you can scan on any time frame, and you can scan for blue raindrops. You can scan for all kinds of stuff that you might be interested in, and it's very fast. And it's cool because it saves you from flipping through charts, right? You can just be like, hey, TrendSpider, go give me every chart that has a blue raindrop, in the last 10 candles on the 10-minute time frame, and it'll go ahead and pump them out for you.
Beautiful. Well, I think that's all we've got for tonight. We do these every Sunday, so if you guys do have any questions about this webinar or want to save those for the webinar ahead, definitely please reach out and ask anything that you'd like. We really appreciate every single customer that signs up. We're still a very small startup, and it means a ton that you'd like to try out the product. And if you do like it and want to be a customer, that's just awesome. We really want to create something that adds value, not just a cool piece of software that doesn't help. We actually want to create cool software so it does add utility to the process, not just to create a raindrop just to create it. We want to show you why there's utility in using those raindrops. So that's my last words. Thank you everyone again for joining. Dan, we'll see you tomorrow.
All right, thanks everybody. Take it easy. Have a good weekend.
Thank you, everyone. Hey, I see Lenny's on the platform. Hey, Lenny, how are you? Hope you're doing well. And thank you so much for joining tonight. We'll talk to everyone next Sunday. Thanks.
Take care, everyone. Bye.